Started. Good morning, YouTubers. Um, but guys, if you have questions about Ninja, please feel free to ask in the room. But if the room isn't available, well, then this is your go-to. And then there's also at the bottom of this one, glossary of commonly used terms. A lot of the things that you're going to hear in the room, whether it's one-to-ones, divergence, bingo, take the money, runner, you can go through and get an idea. Just if you're like, man, what did he say? What are these one-to-ones or whatever? But the one that I think is the most important in the glossary of common terms is the high probability trade. Just the definition there, guys. It's defined as when each indicator on every chart agrees for the trade. Triggers are their strongest. No termination conditions exist. There's no trouble spots between your entry and your target. This high probability trend trade, guys, we are going to do a lot with it this morning. This is a trade that when you follow the rules typically wins 70 to 80% of the time. This is a trade that when you learn the rules, when you learn the looks, guys, it turns you into a chart reader. And becoming a chart reader is the goal. Because once you're a chart reader, and I'm going to start my little slideshow here. Once you're a chart reader, guys, everything kind of falls into place. Because chart readers, that's you guys, understand three very key concepts. They understand where the market is likely to continue, and you guys will use that for your entries on high probability trend trades, maybe momentum trades, HVA trades, for all of your trades. But when you understand where the market is likely to continue, you can take awesome entries. You'll also understand where the market is likely to go. And these likely to go areas, they become profit targets. And I took a picture, I think it was my last trade Friday. Understanding where the market is likely to go. You don't always take exits that seem this precise, but one of the things I was able to do in my trade is darn near exit on the low tick because I'm a chart reader, because I do understand where the market is likely to go, because I use these indicators to recognize. Grant did a great job of that this morning, taking profits at Fibonacci areas. And then finally, you'll understand where the market is likely to stop. And we call these termination conditions. And they do two things for you guys. And I want to tell you, the likely to stop areas may shut down everything. They may stop the market. They may reverse the market. They may create an untradeable bounce. But even more importantly, these likely to stop areas, these termination conditions, when they reverse the market, when the market reverses off of them, this is the setup, the precursor for the highest probability trend trade that you can take. And it's when the market reverses off of these key areas that sets you up for that trade that typically wins 70 and 80% of the time. It sets you up for that trade that creates confidence. And this is what we're going to do this morning. We're going to focus on chart reading. We're going to do it through the high probability trend trade, and we're really going to let it all come down to create trade entry precision, getting into the market where the market is most likely to continue. And I teach in this manner for a very definitive reason. Great entries create manageable trades. Great entries reduce risk. Great entries maximize the profit potential. And great entries come from having advantages, not so much just because you want the market to do something. And then finally, trade management comes after trade entries. So this is very much your order of operations. First, we're going to become chart readers. You're going to understand these three very simple concepts. You'll be amazed if you focus your study how quickly you will get to this point. And then from your chart reading, you'll be able to identify your trade entry for the highest probability trend trade. And then I'm going to give you a plan for managing. And we're just going to kind of keep it in order. And the quickest way to get to where you want to be, ladies and gentlemen, it all begins with posting your charts in class, posting your chart reads, posting the trades that you take, posting the questions that you have. Because when you do that, you open the door for a private conversation, a little private session, if you will, with me. I'm going to look at your charts. We're going to talk about advantages. We're going to identify entries, exits, and we're really just going to kind of work together to create a plan to get you the best of the best and get you in maybe with a little less risk, out with a little less give back, and making sure that you understand the advantages. But the key to that is you have to tell me what you see. Every time you post in the room, Jas, you can do whatever you want, brother. That's the beauty of it. You can buy or sell as soon as the trend changes if you want to. You can also jump in front of a diesel truck and hope it doesn't kill you. And you can skydive without a parachute, and you can swim with sharks with a giant cut on your head. Um, Jess, the way I teach, and let me not be so with that. Once you can read your indicators, Jess, you may find opportunities to trade the second that the trend changes. But the trend change is nothing more than these small triggers starting to break above. And there's just everything that I teach revolves around advantages. Everything that I teach revolves around patterns that win more than they lose. And Jazz, you don't have to be in every move. You don't have to be the first person in. You don't have to be the last person out. But you can if you want. I don't teach it because it's aggressive and it's lower probability. My goal is for you guys to be here forever. My goal is for you guys to find success, consistency, and that comes from being able to read the charts. And then, Jess, once you read your charts, once you're comfortable with it, you'll be amazed at the opportunities that you see. And there are more and more opportunities to get in quicker, closer to the tops and bottoms, but you've got to understand a couple different concepts to grab them. So don't get discouraged that the market moves without you. There's plenty. It trades $22 billion an hour. You should be able to find a couple $100 in there. But why not do it with the highest advantages? And guys, the second half is using your spreadsheet. Nexgen gives you a spreadsheet. I drop mine in the room every day. There we go. I just did it again. This spreadsheet is designed to create recognition. You're welcome, Jess. It's crazy, man. 90% of our days, Jess, are sitting on our hands just waiting for advantages. Even the CEOs that make millions work 8 or 9 hours a day, right? They don't have to be doing something every second of the day to be successful. And trading is very much like that. You'll find that the busier you are, the harder you work, the less likely you are to end up where you want to be. But if you focus on advantages, if you focus on patterns that repeat themselves, trading becomes pretty stress-free. It really does. Your spreadsheet is designed to take a lot of the stress out of trading, because your first page is where every time, guys, as you're practicing, you're simulating, you should be taking pictures of everything that you do. You should be writing the rules on there. Oh, good morning, Cindy. You should be talking about how you feel. You should be showing entries. You should be showing exits. You should really be annotating your charts and giving yourself tons of information, because what you're going to do is you're going to come back every morning and you're going to study what you did yesterday. Guys, when I was beginning, when I finally started doing this, where I came back and I studied what I did the previous day, I began to recognize patterns that were bringing me success. But more importantly, I was able to recognize patterns with the help of my brother, who was my coach and my mentor, and he taught this room. I was recognizing the patterns that were robbing me of success. So what I did is that each morning I started with this great fresh outlook saying, hey, I'm going to focus on this and I'm going to try to make this happen, and I'm going to try to avoid that, because that other thing is what seems to be costing me money. That other thing seems to be what's taking cash out of my account. And I do this every morning, guys, and I still do this every morning. What worked and what didn't work, what felt easy and what felt forced. And this little study each and every morning, it's going to prepare you for the day. It will accelerate the learning. And that's the first page of your spreadsheet. As you begin to become more of a chart reader, as you begin to recognize the best of the best, the patterns that really do provide that statistical advantage, you're going to set up in the green section pictures of trades that you never want to miss. Pictures of trade setups when the rules are met, when everything is perfect. I stole this from class on Friday. You're going to take pictures of these. You're going to talk about why they're the best of the best, and you're really going to begin to build your trading plan. So, Jess, what you may find is that as you're taking pictures, as you are creating this recognition, you might start finding these instances where you can get in a little earlier, where you can get in before everything changes. And you will, through your chart reading, develop a plan for it. The third page, or the fourth tab, excuse me, is you guys using the software. There's well over 300 pictures of great entries, high probability, medium probability, all the advantages in place. There's a whole section dedicated to the NASDAQ. Just a little warning for you guys. I teach mostly on crude oil and the S&P because they're slower. They move a little smoother. The NASDAQ is that crazy cousin that drinks Red Bulls all day and is hard to keep tabs on. And if you don't know exactly what you're looking for, if you don't know what your rules are, if you don't know how to identify them quickly, the NASDAQ proves to be very frustrating and very challenging for new users. So learn your patterns. Eventually, you'll take them to other markets, other places. You'll be just fine. There's a whole section dedicated to management, patterns that repeat themselves. There's those termination conditions. And all of this on the fourth tab, guys, my goal is that you do the same on your tab. This third tab is where you're going to set up your trading plan. This third tab is where you're going to create your best look. So I'm going to go ahead and clear it out here because you should make your third tab look exactly like this tab. Fill it up. The more pictures you have, guys, the easier these things become. And then there's one more tab on the second tab. This is the rules for a high probability trend trade broken down into a section where the rule is met, the rule is not. Rule number 2, the rule is met, the rule is not. If you really want to get to where you want to be, guys, if you really want to be successful with this software, if you want to be able to use it to find more, becoming a chart reader should be your goal. And if you fill out that second tab extensively, you'll be amazed at how quickly that happens. We're going to spend an hour this morning and we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. We're going to do it in terms of the high probability trend trade. We're going to talk about the rules, we're going to talk about the looks associated, and we're going to talk about the advantages. And if you begin to speak to yourself in terms of advantages rather than is this a long, do I have enough advantages to take a long trade, what you'll find is that you can adhere to this really simple rule. Where you say to yourself, the only way I'm going to get into a trade is if my rules are met. And if my rules are not met, I'm going to choose to stay out of a trade for now. And you're going to be able to simulate these rules and practice these rules and post these trades in class by writing your rules on there. I don't want you practicing the wrong trades. We all get excited on simulator. We're like, oh, I made $1 million on simulator. I must be the best trader ever. But if you're not doing it with a statistical advantage, if you're getting lucky, guys, that luck tends to run out. Really creates more of a long-term failure. So simulate, practice, but every time you do it, guys, make sure that you're dropping those charts in here. Make sure you're telling me what your chart read is, because the goal initially is to become a chart reader. And then we're going to simplify. I'm going to give you guys a rock-solid plan. Designed to turn you into a chart reader, designed to create success and confidence. And the less you look for in the beginning, the easier it is to find everything. The less trades you look for, the less markets you're following. Everybody comes in and they're like, man, I see Mark posting winners in the NASDAQ. I see so-and-so on gold, and I see so-and-so on crude, and I see momentum trades, and I see high volume area trades, and I see these jump in trades, and I want it all. And guys, what you've got to realize is that everybody in this room is at a different spot. And if you are a brand new user, your advantage comes from learning the high probability trend trade first, understanding the rules, the advantages, and then a 30-day commitment to that takes you to places that you've never been. But the idea is that you understand the looks so they become easy. So go to the client trades and click on 300 of these, right? And the one common thread that you're going to see if you do is that you're going to have momentum, and you're very often going to see price beyond the trouble areas, and you're going to see this consistent pullback to areas inside of triggers. And that's all we're teaching in the first hour. But take 1,000,000 pictures so that it becomes easy. Talk about what you see so that you can come back the next day and study it. And then keep it simple, guys. We're going to do this on 2 charts. That's it. Are there more charts? Absolutely. Higher time frames, lower time frames, range charts. Man, there's a million ways to confuse yourself. So why not keep it simple initially, guys? We're going to use 2 charts. We're going to talk about a large chart and a small chart. And the reason that I do that, the large chart is the large crowd. Large crowd determines which direction the market is going. The large crowd is going to determine whether or not there is momentum in that direction, and then they're also going to react to areas. And the large crowd leads the way. The large chart leads the way. And then there's always a small crowd, right? And they tend to fight and they push against, but they're not successful as often because the large crowd, man, strength in numbers. So ask yourself, who are you trading with? Are you going with the flow? Or are you fighting everything because you need to be first, right? Or because you hope that there's a trade or you're whatever. Don't fight the large chart. Large chart's going to define direction, momentum, and areas. We do this on the most current bar of the large chart. 1 bar gives us everything we need, guys. 1 bar is going to define the direction of the market. If the background is green, it's going up. If the background is red, it's going down. It's really pretty simple. The first bar is going to define momentum. You're either going to have strength in the move or you don't. Let it be black and white. And then it's also going to define areas. You've either reached an area that's problematic or you have room to the area. Your first 2 rules for the high probability trend trade must be true on a large chart. And when they are, you're going to move to a smaller chart, your entry chart. And what happens in 1 bar on the large chart, you're going to be able to break down 15 to 30 bars on a smaller, faster chart. You will pinpoint where the market is most likely to continue. This becomes your entry via rule number 3. And you're just refining that broad stroke. It's going to reduce your risk. It's going to maximize your profit potential. So 2 charts and 3 rules. Simplicity. Focus on the advantages. Rule number 1 provides you the advantage of momentum. Your advantages are written in yellow at the bottom. Rule number 2 gives you a clear path, nothing between you and your targets. And rule number 3 is designed to get you in where the market is most likely to continue. So as the brand new user, speak to yourself in terms of advantages. Every time you look at your chart, do I have the advantage of momentum? Is there a clear path? And if so, do I have a well-defined entry area? If I do, then the rules are met for a trade. It's time to take a trade. It's time to build trust in this recipe. And what's cool is if they're not met, it's okay to say that's not my money. There is no trade. Eventually, this simple trade is going to teach you to read your charts. And from reading your charts, you're going to find more opportunities. But let's get to work on the advantages here. So rule number 1 says you must have strong trigger lines because it provides the advantage of momentum. Strong trigger lines can only happen if you're trading with the direction. So if the background is green, the only way to have momentum is if both small and large triggers are green. Small triggers are solid lines, large triggers are dashed lines, and they're just moving averages. That's all they are. But when the small triggers break above and away from the large trigger lines, that's your strong trigger look. It's the same look up or down, going down. Small's below the large, space between the 2. It's this space that defines strength, like scissors that have opened, ready to cut. And when I have strong triggers up, the odds are favorable for the market to continue up. And when I have strong triggers down, the odds are favorable for the market to continue down. And I'm going to use this odds favorable momentum to buy Fibonacci support on that smaller, faster chart to go with the trend, to go with momentum, or to sell Fibonacci resistance on that smaller, faster chart. On your large chart, those pullbacks on the small chart look like a tail or a wick. We don't trade tails or wicks, but these become very valuable as you go back and study this trade setup. As you go back and look at the 2 charts together, you'll be able to identify these tails with the rules met and go see if you had that rules-based entry. So strong triggers up, strong triggers down, guys. This is the advantage of a market that's likely to continue. We're going to call this odds favorable momentum. This is what it looks like when rule number 1 is met. When your small triggers work their way back inside of the large triggers, the scissors have closed. This is what we call a weakening of the large triggers, and anything can happen up or down. It really becomes a little bit of a crapshoot. And with these weak triggers, very often you're going to see reversals. You're going to see deeper retracements. And even more so with those weak triggers, when you reach key areas, these areas are more likely to hold than break without that momentum, because odds favorable momentum can push the market. Odds favorable momentum can break key areas. And odds favorable momentum, really, guys, this is the one that I never want to do without as a new user, because it can cover the mistakes that new users typically make. Momentum is an outstanding advantage to have. And that weakness, that anything can happen at key areas, guys, this is going to take you over to rule number 2, because the large chart is going to define the direction, and the large chart is going to define that momentum. Do you guys see the strong triggers here? Smalls above the large, larger wide, angled in the direction of the trend. Guys, this is a look that happens all day. Odds favorable, breaks areas. Odds favorable, pushes down. Odds favorable, continues the market up. Odds favorable, down it goes, up it goes. And you see this a lot, that strength pushes, it breaks areas. Weak triggers, add an area, there's your reversal. And we're just going to use this concept, guys. Strength leads the way. Strength is what we're looking for. Strength is everything that we hope for when we're looking for a trade. But now we've got to make sure that we have a clear path. We have to make sure that we're not trading into areas that may reverse the market. That's those termination conditions, those areas that may create a bounce, that may start a fight. And guys, all a termination condition is a Fibonacci-based indicator. It can be a divergence high line, red resistance, blue support, divergence low line, even these yellow 1-to-1s. And these lines can cause trouble. These lines are where the people that are in control, the large crowd, are reacting to the market, where they are buying, where they're selling, where they're taking profits, where they are choosing to ignore and smash through with all that momentum. But you guys are going to know about these areas before you ever get to them. And then you're going to use your T3 trigger lines, the same ones that create momentum, and you will understand whether they are likely to stop the market, whether they have the potential to break, or whether or not they've broken. And this is going to be rule number 2, using these areas. And it's a recipe, a pretty simple recipe to decide when these areas have the potential to stop the market. And it's very simple to understand when areas have broken. So the first thing that must happen is price reaches an area. Your dynamic Renko bars, and they come down and they reach Fibonacci support here. Once that happens, ask yourself, where are the trigger lines? And if they're not below support, guys, no more short trades. This is an area that may stop the market. This is an area that may create an untradeable bounce. This is an area where buyers and sellers may fight for the next 2 days trying to figure out who's going to win, to go through the area or to trade from the area. So if price reaches an area and the triggers don't break, sit on your hands. It's a termination condition. You've lost the advantage of a clear path. And guys, I want you to see this. Divergence high, triggers below, and the market's trying to push down. Fibonacci support, even with odds favorable, and the market pushed up. Support holds here. Resistance holds, support holds, resistance holds. Guys, you know about these areas long before you ever get there. These 1-to-1s, even with odds favorable momentum, that's what set off the uptrend. And that resistance, before the triggers got through, gave a huge push. You're going to have this crazy advantage where you know exactly where the market is most likely to stop. You know exactly where the problems are. And if price reaches an area and the triggers don't break, just don't take the trade. Is everybody comfortable with that concept, especially my new users? If price reaches a Fibonacci indicator, fibs, midbands, yellow 1-to-1s, divergence highs, divergence lows, and the trigger lines remain above or below, don't do anything. Sit on your hands. Wait for the large crowd to do their thing. Happened up here too. Price reached support. Those triggers stayed above when it got there. I just don't know. I don't know what's going to happen. But what I do know is that when my small triggers and my large triggers get below an area of support, well, it behaves as resistance. The area is now broken. When both lines of the small and the large get to the other side of the problem area, the area is broken. Fibonacci support behaves as resistance. You'll notice that there's odds favorable momentum. And guys, look at the tail. Look at the pullback on the smaller, faster chart. You're going to be able to pinpoint exactly where that's most likely to happen. And this becomes your high probability trend trade entry. And guys, that's a beautiful look because it has momentum. You have room to the next area. Rules 1 and 2 are met completely. Is everybody comfortable with that so far? No triggers, no trade. Both triggers, clear path. And remember, you're under no obligations to answer me in this room. But I'm going to tell you right now, the people that participate get to where they want to be faster. There's one more look, and that's when the small triggers smash through with odds favorable momentum, but the large triggers haven't made it yet. And guys, we call that a 50-50 look. And a 50-50 look tells me that this area has the potential to break. But because small and large aren't through, the area is not broken. It is not a high probability scenario. It's only the potential to break. So there's three options, guys. No triggers through, the area is not broken, sit on your hands, do nothing. You don't have to see into the future. Just wait for your indicators to tell you that the path is clear. And that happens when the small and large break the area. And then finally, when the small are above, the large are not, it's odds favorable momentum, strong triggers. 69.80 has the potential to break, but until the large get above, it's nothing more than potential. And I'm going to give you a plan to take this look, but without that clear path, you're going to insist on momentum and the perfect entry. So price comes down, price goes up. We call that a pivot. If there is a loss of momentum at that pivot, you're going to see the cyan line print, guys. You're going to see this negative number print. This doesn't happen until about the third bar up. You won't know that there's a loss of momentum until about the third bar up, which is why a pivot with divergence is not a termination condition. Price created that cyan line. It didn't reach it. But when the market comes back and reaches that cyan line and the triggers are above, guys, this is a textbook termination condition. This says, hey, Mark, no more short trades. And if price exceeds it a little bit and trades back above, then it becomes what we call a pivot stop out. And a pivot stop out is a absolutely no more short trades. And if it's at a magenta line high and it trades above and below, the triggers are below, no more long trades. Guys, pivot stop outs, respect them. And they become even more powerful when they coincide with Fibonacci resistance or support. And even with odds favorable, guys, if you reach those yellow 1-to-1s, it says no more short trades. Rule number 2 isn't met. Quiet classroom today. That's okay. I'm just going to ramble through. You guys, if you have a question, it's on you to ask. No short trades. Whoops, wrong one. Because my triggers are above. And it creates an untradeable bounce all the way to resistance, and my triggers remain below. I don't have a clear path either direction. I don't have momentum. My trigger lines aren't the same color as the background. I love it, Rob. I'm still into resistance. And guys, this market dances for 45 minutes. For 45 minutes, I can't find a rule being met. For 45 minutes, I can't come up with a statistical advantage. This is the 90%, guys. 90% of the time, I'm just waiting. I'm waiting for advantages. But what happens is eventually, this termination creates the reversal. I get that momentum. The path is now clear because all of my triggers are above resistance. And there's that tail, guys. There's you guys entering the market for the highest probability trend trades you can take. And the idea is that you don't give away $1,000 here trying to predict, but rather you sit, you're patient, you wait, and it creates an opportunity for you to ride that wave of momentum to the next key area. And guys, this is large chart terminations. The large chart's going to use lines. The large chart's going to use Fibonacci-based indicators to tell you if the market is likely to stop, guys. And it does it with that simple comparison. And it's the lines on the large chart that create problems. There is one more termination condition, But you're going to see this one on the small chart. You're going to see that loss of momentum 3 times in the same price range. 3 divergences in the same price range may terminate the trend, guys, and this is a very powerful condition when that third divergence happens with those anything can happen triggers. It's the same look on a small chart. Smalls outside of the large is odds favorable. Smalls inside of the large is anything can happen. So 3 divergences may stop the market. May, might, could. Not guaranteed. 3 divergences with weak triggers is more likely to stop the market than 3 divergences on its own. And 3 divergences with weak triggers and that third pivot is higher than the previous from a low or lower than a high is even more likely to stop the market. So guys, you're going to see this look on a small chart when your large chart is moving too slow to give you that information. You're not going to see these sudden changes on a large chart. You're just going to see what looks like a reversal from the middle of nowhere. 3 divergences on the small chart is the only time rule number 2 isn't met. It's the only time a small chart can tell me that my path isn't clear. And this is 3 divergences, guys. Not 2, not 1, 3 divergences. Tells me that my path is no longer clear, that I'm not looking for short trades. And the large chart is going to define it using areas. The small chart's going to use those areas for entry. So if you feel like it, give me a Y in the room. Large chart is green. I know it's going up. Large chart small triggers are above the large triggers. There's space between the two. I have momentum. Large chart, most current bar has not reached Fibonacci resistance, and all of my triggers have cleared support. Therefore, ladies and gentlemen, I have a clear path. I have the advantage of momentum and the advantage of a clear path, and now I'm going to go refine that broad stroke of a brush. I'm going to go to the small chart, and I'm going to use a limit order to buy or sell a pullback at an area inside of what I call favorable large triggers, guys. And favorable large triggers, I'm going to show you the picture. I can't remember if I put it into my PowerPoint or not. Favorable large triggers means that the large triggers from the small chart, the smooth dashed lines, and the synthetic triggers, those stepped dashed lines. And just for reference, your synthetic triggers on the small chart are nothing more than the large triggers from the large chart. That's all they are. But when they trend one on top of the other, like two snakes riding piggyback, this lets me know where the market is likely to correct to. Price comes back to these moving averages. So when the moving averages are one on top of the other, there's less space for price to come back to. But we're not going to rely just on the triggers. I'll put this picture in the room for you. What we're going to do is we're going to use a limit order, which means that you're going to have the ability to actually wait for the market to come to you. That's how good you're going to be at pinpointing entries. And you're going to have that limit order waiting at an area, and that area needs to be nestled inside of those favorable large triggers, guys. And it's those 3 things that give you an entry where the market is most likely to continue. It's those 3 things that give you that third advantage. So when the large chart says that the advantages are in place, when you have odds favorable, when the path is clear, you're going to focus your attention on the 5-1 large triggers. Are they up? The synthetics, are they wide? Are they angled in the direction of the trend? And you're going to look to see if there's any areas that may fall within, fibs, mid-bands, yellow 1-to-1s. And guys, this is all you're doing. This is not a trade yet, because if you remember, when the large crowd says go, the small crowd is going to give a shove, and that's what gets us back to our entry. So with everything up, I see triggers, I see areas, and I need to wait for the small crowd to do their thing, guys, and that begins with a reversal bar. This reversal bar says that the small crowd is fighting. This reversal bar lets me know to look for my favorable large triggers and to identify the areas that are falling within, fibs, mid-bands, and yellow 1-to-1s. So at the time of the reversal bar, I like to draw on this picture for you guys. I want to go through everything that we're looking for, the easiest way to find these entries. And it begins with the large chart having odds favorable momentum. That's the first advantage. And it begins with the large chart having a clear path. That's that second advantage. So on the small chart, once these are true, I'm going to wait for a reversal bar. This is not my entry. This is the beginning of the retracement, that small pullback counter the underlying trend. And at the time of the reversal bar, first I'm going to identify my triggers. From the large to the synthetic, the tighter they are, the smaller this box will be. But the trigger lines are not my entry. So I have to identify my highest point of support to my lowest point of support inside of favorable large triggers. This shaded area represents where the market is most likely to continue. This shaded area is the best of the best spot to take your entry. But because of odds favorable momentum, because of a clear path, I'm going to activate a limit order, a tick or two above the highest point of support inside of favorable large triggers. I'm not going to trip over a couple pennies hoping to save a few dollars. And guys, that becomes your entry for the highest probability trend trade. Your limit order is going to go a tick or two above that highest point of support. Is everybody comfortable with this so far? Reversal bar prints, market starts to come down. If it hits your limit order, you're long with odds favorable momentum. You're long with a clear path. You're long where the market is most likely to continue. And if the market continues down, you're still in that window of opportunity. You're still where the market is most likely to continue. Even if it goes all the way down to these yellow 1-to-1s, they're still inside of the correction point. There's still an area to bounce to create this trade. And guys, I'm telling you, it's not, I mean, we're good, right? But we may not be one tick good. Sometimes we are. But you have to prepare yourself for that little bit of drawdown in the middle of a trade. But you have to remind yourself that you still have momentum up, that you still have a clear path up. And guys, you're going to put a protective stop about 4 or 5 ticks below that window of opportunity. You're going to put a protective stop where the market shouldn't go. There's this adage that mature traders manage their risk before they ever manage their profits. Guys, you manage your risk by insisting on odds favorable momentum, and you manage your risk by not trading into areas that may reverse the market. You manage your risk by not jumping in on a reversal bar or a fluctuation on a small chart. And you manage your risk by taking an entry where the market is most likely to continue. And you manage your risk by putting a stop where the market shouldn't go. And I'm going to tell you, every now and then, that stop's going to get hit. Because anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. And guys, this is a cost of doing business. This is the market being wrong. This is a normal part of a positive equity curve. I'm not going to sit here and tell you brand new users, you folks on demo, that you're never going to take losers. You will. The key is that you take the right losers, that you take the losers that had a statistical advantage, that you take a loser that was a combination of odds favorable momentum, a clear path, and the perfect entry. And if this one gets hit, guys, if they decide to take you out of this trade, if your stop gets hit, it's a pretty small stop. And the only thing I want you to say is next. I'll wait for those advantages to come back. A couple things that happen for new users is they see this fluctuation, and I see a lot of users getting in at the top of this bar, even though the market didn't come back to support inside of favorable large triggers. The only thing that you've done by taking this fear-induced entry is increase your risk. The only thing that you've done is shorten the distance to your profit target. Guys, this is what we call the fear of missing out. I also see entries about right here, because what if it doesn't come back and you start getting scared? Oh no, I don't know. And you get in and you're like, I can't risk that much money. That's too much money. And you put your stop right at support inside of favorable large triggers. And what happens more often than not when you do that is the market stops you out and then does exactly what it was supposed to do. So I want you guys to work through a couple things. We're going to wait for the areas inside of favorable large triggers. Not going to get fooled by fluctuations on this smaller, faster refinement chart. If the small triggers turn against me, who cares? Momentum is defined on the larger chart. My goal for you guys is that you just identify this entry, that you get to the point to where you can look at your charts and understand odds favorable momentum, that you can look at your charts and you can understand when the path is clear, and that you look at your charts and understand that we don't jump in at the top of the bar. We wait for the pullbacks inside of favorable large triggers, guys. And if you can do this, you'll be amazed at just how many more opportunities you'll see. You'll be absolutely floored at the patterns that you recognize. And I talk about tails, guys. If you circle a tail on the large chart, but just historically, when the rules are met and it lines up with support inside favorable large triggers on a small chart, guys, this is your best of the best. This is your high probability trend trade. This is the one that you're looking for. You should be taking that picture. You should be learning to take these trades. And I'm going to do this real quick, and then we'll come back to the slideshow. Oops, and I killed my NinjaTrader. Dagnabbit. That's okay. We'll pull it back up, and then we'll just get back into this one right here. Guys, once you can identify this entry, you're prepared to begin to manage trades. Once you can identify this entry, you are a chart reader. You're looking at all the things that it takes to create a trade. Odds favorable, clear path, pull back to support inside of favorable large triggers. And guys, your goal, you can go back and circle every one of these tails. And if they line up, that's your trade. But your goal for 20 days with me, guys, that's it, 20 days, that's all I ask for, is learn how to recognize where the market is most likely to continue. Embrace the idea that advantages lead the way. Get to the point to where every time you speak about what you see, you speak in terms of advantages. Hey, I'm looking at this chart and I have momentum and I have a clear path. Let me find an entry area. And be okay with the idea that you don't have to be in every move. You should be in the best moves. That taking a trade because your gut says maybe it's going to go up or down isn't as effective as having a pattern that repeats itself every time. And the cool thing is, guys, is these great entries are the first step in management. Getting your stop where the market shouldn't go, outside of that window of opportunity. And what's even better is in a trade that typically wins 70 to 80% of the time, more often than not, you're going to get a reversal bar in the direction of your trade. And when you do, you can reduce your risk even further, a tick or two above that reversal bar. And it's not uncommon to see losers turn into $20, $30, $40 losers rather than $300 to $400 losers. It's not uncommon to see you guys taking these great entries, taking this very simple management approach to stops below reversal bars, and then just be willing. Be willing to take a hickey every now and then, because you know that if you take 10 of these trades, you're going to lose 2 to 3, but you're probably going to win 7 to 8. And guys, your first 30 days with Nexgen is just designed to develop trust. It's just designed to create an opportunity where you can identify these strong triggers. I'm still calculating here. But at 727, what did that look like? I'm going to crash my NinjaTrader again doing it. So while this is calculating, let me ask you guys. See, I did it. Don't mess with your NinjaTrader while the charts are calculating. That was my bad for doing that. Are there any questions about high probability trend trades? Are there any questions about momentum? Are there any questions about termination conditions? Are there any questions about finding your area of entry inside of favorable large triggers? Guys, are there any questions about background colors? Any questions about anything? Is there anything that I can clear up for you to make sure that you're comfortable with becoming a chart reader? Nope, cool, love it. I know that everyone in this room has it down perfectly, but if for some reason you're like, man, I may not be completely truthful with Mark, I don't get this 100%, here's your plan to becoming a chart reader, guys. Here's your plan to becoming proficient at this trade. Here's your plan to be able to recognize these advantages at the drop of a hat, guys. In order to get better, in order to get there fast, doesn't have to be a fib, Muser. the language, and I'm going to type it in the room, is a no triggers through termination condition that reverses the market. And we'll go back and look. Everybody has it down, I know, right? It's okay. It's hard. It's hard to admit in class that you have questions, guys. Let me tell you a story real quick because it's Monday, and really I have the microphone. You can't stop me. When I was 25, I went to the Motorcycle Mechanic Institute in Phoenix, Arizona. And I wanted to be a motorcycle mechanic because I'd been riding all my life, and I wanted to get out of the bar business. And I said to myself, I'm going to go and I'm going to learn to work on motorcycles. The one thing that I didn't have was any foundation to grow from. I didn't know anything about mechanics. I didn't know anything about engines. I knew how to ride a motorcycle, but that was about it. And we're sitting in this, it is what they called their theory class. And their theory class is when they went through basic internal combustion. And I'm sitting in this room with 50 other gentlemen and a couple ladies. Most of the gentlemen, and that's cool. Troy, that's totally cool to not know what you don't know yet. And this is the easiest way to get you to where you want to be. But guys, I'm sitting in this room, and one thing about trade schools is there's a lot of Army veterans using their GI Bills, but there's even more prisoners, ex-convicts, using their rehabilitation money. And I'm in this room of a bunch of tough-looking dudes. There's Hell's Angels in there. And a lot of them, they're all nice guys, but they're still very intimidating for 25 years old. And the instructor is talking about camshafts. And I raise my hand in front of 50 strangers and I say, hey, what's a camshaft? And the whole classroom erupts in laughter. And I went to that school with the assumption that I knew absolutely nothing. And my goal was to approach it like I knew absolutely nothing. And my goal was to ask as many questions as I could ask to make sure that I left there knowing something. And everybody laughed at me, and it was funny. And I made a couple friends out of it. And a few people were like, oh, there's that guy that doesn't know anything. But guys, I ultimately ended up graduating top of my class. I can tear down an engine in my sleep, but I had to learn the basics. I had to get through theory and understand the very basic concepts to be able to apply it. And that's exactly what Chart Reading 101, this thing that I just put in the room, is for you. And I created a section on your spreadsheet to assist with it. So your goal, and guys, you can do this in the first week. So V. Troy, you can do this in the first week, is you can go take 25 pictures of strong triggers. And I've given you the first 16, but strong triggers always look the same. Strong triggers are always angled in the direction of the trend. Strong triggers always have separation. The colors match. This is always strong triggers. So if you go through and you take 25 pictures, strong up, strong down, and if you're not sure, take that picture, drop it in the room. Hey, Mark, I just want to make sure. I'm taking pictures of strong triggers. Did I get it right? That's the look. And I'll be like, heck yeah, great job. And then knowing when the advantage is present is just as important as understanding when the advantage is gone. So you're going to go take 25 pictures of weak triggers, and you're not just going to take it. You're going to say, look, weak triggers, small inside of the large, anything can happen, and the market reverses because of weak triggers. It makes it hard to trade. And then you're going to do it with a clear path, and you're going to do it with terminations, and you're going to do it with that 50-50 look, and you're going to take pictures of entries. And guys, this is 265 pictures that, honest to goodness, won't take you more than 2 or 3 hours to do. But the goal isn't to just take the pictures. You have to write on your chart with the whys. Why is it strong triggers? What is the look? How do I identify it? And what do those strong triggers mean to me? What's the advantage? What's the disadvantage of weak triggers? And guys, if you do this on each individual picture, the time that you spend typing, analyzing, and posting into your spreadsheet, it not only reinforces the looks, but it associates an advantage with the looks. And then you're going to piece them together to create a trade. And the parts make it easy to recognize the whole. So Troy, take 3 days, right? Take 3 days. And on the first day, get all your strong triggers and get to the point to where you never miss the idea of what a strong trigger looks like. And then since you're looking for a clear path initially, let's talk about the clear paths. Let's talk about both small and large above the area. Look at it at broken. The path is clear until it reaches the next area. And it's okay to not find a trade in the first day or two. And then you're going to look for the entries, right? So if I have strong triggers up and I have a clear path up, well, then the only thing that I really need to be able to do is find that window of opportunity to the upside to identify where the market is most likely to continue. And I'm with you. I didn't know what I didn't know initially. I didn't know what to ask. I didn't know what questions to ask. And I totally get that. So go through this and it'll open up some great questions. Go through this process, guys. And this is for everybody, not just you guys that are brand new. You guys that think you already know everything, but you can't seem to win more than you lose. This may be a great opportunity for you to get a little clarity. This will be a great opportunity to make sure that you're not trading in what I like to call half-truths, where you say to yourself, man, but I had strong triggers, when the reality is maybe you had, well, I'm trying to find weak triggers. Maybe you had a slowdown, right? Maybe you did trade into a termination condition. Maybe there was a problem. Half-truth trading, I've done it. But eventually, the market comes together, right? And maybe there's odds favorable, and maybe that path is clearing out, and just maybe it pulled right back to a mid-band at those triggers. And you can go back and you can begin to study these looks, and you can say to yourself, where do the advantages come from, right? Where's the best of the best? Where's my opportunity to get paid? And more importantly, where do I need to stop looking? Because look at how this fib stopped the market to the tick. So for you guys that are brand new, we're going to piece together 3 different looks, and we're going to turn those into a trade because of the advantages they provide. And you're going to do that with the KISS plan. Excuse me. This KISS plan is a stepping stone in your learning journey. So JAS, this one keeps you harnessed to the high probability trend trade initially, but through simulation, study, class feedback, continuous practice, you're going to create a plan that suits your needs, ladies and gentlemen. You're going to create a plan that revolves around your ability to read the indicators. But until you have those abilities, and it takes a little bit, give yourself a little grace. You're new. This plan, this KISS plan, optimizes your chances of success. What does that mean? That means that this is the 100% best of the best way to take a high probability trend trade. And this is the best of the best, 100% proven through countless hours of study on my end and an awful lot of losers on my end to take that 50-50, that trade where it has the potential to break. Guys, if you keep it simple initially, you're going to become a chart reader. If you keep it simple initially, you're going to have a recipe to take trades that wins more than it loses. You're going to create confidence through success. And just let me tell you right now, the people that chase more, the people that look for more, the people that try to catch every move instead of the best moves, these are the people that tend to spin their wheels, sometimes for years. I've seen it happen. And every trader that I've ever worked with that has told me, hey, Mark, I'm not hitting my goals. Mark, I'm not getting to where I want to be. Hey, Mark, man, I keep getting stopped out of these trades. I say, hey, do me a favor. Let's go back to the KISS plan. Let's keep it simple for a week. Give me 5 days. And follow this to the letter and let me know how it works out. And guys, usually it means 80% winners, give or take. Usually it means a lot more confidence and a lot less frustration. And usually it means that people end up back on track. So your simple plan for consistency starts with never fighting the large chart, guys. Don't fight momentum on the large chart. Don't fight termination conditions on the large chart. It really is the simple recipe to commit financial suicide in one easy step. Trading against strong triggers, trading into termination conditions. My brother made this years and years ago as trying to create a funny way to remind you guys. These are the two most common mistakes that new users make. Forming an opinion that they want to be first, or forming an opinion that that same termination that stopped the market 65% of the time before is going to break for them this time because they really want it to go down. So take your high probability trend trade entry. Make it your entry. Commit to it. Own it. Love it. Name it if you want to. But focus on your entry, guys, because once you can enter the market where it's most likely to continue, management becomes easier. But the same way that you entered mechanically, the same way that you entered based on advantages rather than opinions, the same way that you allowed your indicators to tell you that it was time to take a trade, that same mechanical approach to management tends to be advantageous for the new user because it will eliminate opinion and it'll eliminate hopes and wishes and wants. My father-in-law always said, wish in one hand, poop in the other. Tell me which one fills up first, Mark. And it was always the poop, guys, and that's a horrible thing to have in your hands. But you will craft a plan tailored to your personal goals based on your experience reading the indicators. As you become a chart reader, when you can incorporate those chart reads rapidly and efficiently, guys, you're going to change your management plan dramatically. So in the beginning, your management plan revolves 100% around entering where the market is most likely to continue, getting in at the bottom of that window of opportunity for this short trade, and not getting in because you hoped that it was going to work or you wanted it to work or you wished it would work, but because you had odds favorable momentum, because you had a clear path. We are relying 100% on the large chart advantages before we ever take an entry on a small chart. We let the large chart lead the way. And once I'm in this trade, my entry is filled, my momentum is down, my path is clear, my initial stop goes where the market shouldn't. In your ATM strategies provided by Nexgen, it's 12 ticks initial. Your initial stop is set to 12 ticks. 12 ticks is not where your stop goes. Your stop goes where the market shouldn't. Some days it'll be 7 ticks, and other days it may be 17. Only you can decide whether or not that risk is appropriate. I can tell you the risk doesn't bother me a bit if I'm in the right trades. And then what's going to happen is either my stop's going to get hit, it's a normal part of a positive equity curve, or I'm going to get that reversal bar in the direction of the trade, guys. And at this point, I'm going to reduce my risk even further, 2 ticks above it. And I'm either going to get stopped out because, you know what, I can't win them all. I don't expect to win them all. My only expectation is that I enter the market with my rules met. That's the only thing I can control. So I'm either going to get stopped out, or more often than not, it's going to go to my first target. For the brand new user, the first target is $100. 100 measly dollars, 100 tiny little dollars that create an enormous amount of confidence, that create an enormous amount of trust in your best entries. And it puts money in your pocket and gets you paid, guys. And that is what makes it easy to remind yourself that the large chart is screaming down with nothing in the way, and I'm going to go break even. I'm paid. I have no risk, and I'm going to hold. I'm either going to get stopped out, break even, or it's going to go to my second target. And for the brand new user, the second target is only $200 in the distance, which means that in one high probability trend trade with a mechanical entry, with a very mechanical, pragmatic approach to management, that's a $300 trade. And you guys with dollar signs in your eyes, dreaming of Ferraris and dreaming of mansions and all the things associated with it, you have to remind yourself that it's not the number of trades that typically gets the user paid. It is the quality of the trades, the consistency of the trades, being able to do the same thing over and over. And guys, $300 a day as a brand new user, if that's the best you can manage, that's a $1,500 week, ladies and gentlemen, and that's a $6,000 month. And that's actually a $72,000 year based on one successful trade. As you become a chart reader, maybe your 2 contracts turns to 4 contracts with the exact same management plan, and it goes to $144,000. As you become a chart reader and you find success, you begin to recognize that on your large chart, if it's odds favorable and the path is clear, you're going to understand where the market is likely to go, and you're going to begin holding for larger moves, for better moves. And guys, this is the plan. The plan is that you embrace the idea of where the market is most likely to continue, and then keep it very, very focused in the beginning. And then eventually, from that focused beginning, you're going to create a trade. You're going to create a trading plan that suits your needs, that fits your pain tolerance, that goes in conjunction with your ability to read charts. So the high probability trend trade is where everything starts. It's one piece of paper. And I want you to see something. If I take this off, and I take all of this fluff off, right? Guys, it is a half a sheet of paper. That's your whole plan, is a half a sheet of paper in the beginning. It's simple, it's easy, it's focused, and it's designed to optimize your chances of success. Once you can chart read, well, you can go to your medium probability trade, guys. This is the first one. This is the first one outside of the best of the best. And this is the one that is that 50-50 trade. And that 50-50 trade, once again, is when areas have the potential to break, but they haven't broken yet. The large triggers haven't made it through. So because the area hasn't broken yet, let's see if I have my little slide rule thing that I like to do. There it is. Whoops. Because I don't have a clear path, bonk, the KISS plan is designed to keep you focused on momentum, to make sure that your entry is great. So as you go through the KISS plan for that 50-50 trade, it says that it's coming from a good top or bottom. And what a good top or bottom means, guys, is that the market made it to a termination condition. Hold on. None of the triggers broke through, and it reversed the market. And guys, there's a little rule 2 consolidation. When the termination condition reverses the market, when a no triggers through termination condition reverses the market, that is a strong top or bottom, because it means that decisions were made at a key area, and those decisions were so strong that the market changed direction, went the other way. And guys, if it's coming from a strong top or bottom, it increases the likelihood of success on the 50-50. Odds favorable momentum is imperative. We don't hope for areas to break with weak triggers. It takes that strength to go through. And then smalls outside of the large on the 5-1. I want momentum on both charts. I refuse to sacrifice momentum, which is why in this one designed to optimize your chances of success, it says no divergence on the 5-1. Absolutely, positively, no indication that there's any loss of momentum on the 5-1. This is the biggest killer for new users. This is the most lost trade among new users because their hope to be in a trade outweighs their ability to commit to advantages. But if there is no divergence, if it's yes all the way down, enter at the area. But it's such an important concept that I added it one more time, bright red. If divergence is there, don't take the trade. You're giving up your advantages. It's less likely to work. Doom, doom, fear. And then you have to manage it. And it's not a high probability trend trade, so the management has to be different. You have to know what you're getting into so that you know how to manage it. Your initial stop is still where the market shouldn't go, and you're going to let that reversal bar get you less risk. And then it reminds you for the third time, if divergence prints, exit the trade. You're giving up advantages. Your first target's $100 or at the first trouble spot. And guys, if your first trouble spot is $30 in the distance, you have to decide whether or not you're willing to take that trade. And then quick profits on the second, because it's not a home run trade. It's a 50-50 trade. It's a medium probability trade. It's not a trade that typically wins 70 to 80% of the time. So guys, defining your entry becomes the most important thing to the new user. Defining where the market is most likely to continue. That's your KISS trading plan right there in the room. I'm also going to give you a high probability trend trade checklist, something that you can print out, that you can put on your desktop, rules that you can write on every chart where you take a trade for your annotations. And I've never had anybody follow this checklist and do worse than 70% winners ever in the history of the checklist. And then there's the same checklist, talking about the advantages, showing you pictures of the advantages, committing those looks to memory so that they become easy during the live market, guys. So there are two checklists. One solid plan designed to optimize your chances of success. I'm going to give you chart reading 101 one more time in the room. And guys, I'm also going to give you my PowerPoint, the same thing I use to teach class every day. And then just so everything is in the same freaking spot, there is my checklist, guys. There are 6 downloads that you should take advantage of right now. If you start simple, if you stay focused, you will become a chart reader. And then once you're a chart reader, ladies and gentlemen, you're going to begin to recognize and find advantages on the way down. Um, and you're going to be able to see this, and you're going to be able to catch this, and you're going to be able to understand this. And this is going to be the basis of everything you do initially. Are there any questions about the high probability trend trade? Are there any questions about momentum? This is the large chart. The background is red. The smalls are below the large. We could call that momentum, but we're directly into one-to-ones with the triggers above. That's also a termination condition. We have to sit on our hands for just a minute and see if we can get the small triggers below the treble. If we can't, there is the potential that it'll bounce back up. There is the potential that it may reverse. And guys, look what the market's been doing. Ugly, 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 keeping you out without rules met. And now it's coming to the downside. And the smalls have broken through, but the large have not. And if I get a reversal bar, ladies and gentlemen, I can identify where the market is most likely to continue. I can identify, whoop. And of course, there we go. We broke through. Oh, it did it again. So it just starts over. Over and over, guys. Sometimes you'll get a fill, sometimes you won't. Sometimes you'll hit a termination, sometimes you won't. Sometimes it'll break through, sometimes it won't. But the idea is that if you just have statistical advantages, 1, 2, 3, 4 divergences in the same price range. Third one's lower than the previous. Guys, we teach this first hour. This says the market's more likely to go down than up. Pretty cool, right? I'm going to take a break, guys. I'm going to go walk a lap. I'm going to breathe deep. I always recommend that you guys do the same. Take a second, clear your brain. Staring at charts all day long, especially if your rules aren't met, lends itself to a little fabrication. It lends itself to getting you to make poor decisions because you're bored, and that happens a lot. So I'm going to go take 5 minutes, guys. When I come back, we're going to start looking at the charts that you guys posted. We're also going to go through, and if our rules are met live, we'll simulate it. We'll have some fun. We'll go through the KISS plan together. I'll see you guys in 5 minutes. Talk amongst yourselves. Never too early to hear from you, period. Wednesday is fun, period. I will see you then, period. Are you in Dallas all week? Question mark. Do you need a place to stay? Shorts. Last time I played my hoodie. I love you, sweetheart. All right, ladies and gentlemen, let me introduce you to a strong trending market. 30 or 40 bars in the same direction, multiple areas broken. We are officially strong trending, which is cool. What does that mean? That means that until something dramatic happens, we're just going to keep going down. Should be fun. Hey guys, I'm going to scroll to the top of the room. We're going to start talking about the charts that you guys have posted, the things that you see, all of that good stuff. And Andy, are you here today, Andy? I haven't seen him. That JOB might have gotten him. Let's look at what Andy did, see if we can get some good lessons out of it. And notice that he's using market replay, guys. He's saying, hey, I got to practice, so let me use market replay. Let me replay. And Andy just said, I've got momentum and a clear path, nothing in the way. I'm going to hop in and hop out at trouble. And guys, not a high probability trend trade, but a great use of momentum and a clear path. And then he has momentum up, so he goes long, gets paid, still has momentum up, goes long, gets paid, still has momentum up, goes long, gets paid. And this is kind of cool because it kind of illustrates that you don't have to be in at the bottom and out at the top. You don't have to hold through areas. You can literally get in, get out, reassess, get in, get out, reassess, get in, get out, reassess. And if you can always find enough advantages to make it happen, guys, then it works out. That's an entry at an area inside of favorable large triggers. That's an entry at an area inside of favorable large triggers. That's an entry at an area right inside the triggers. So Andy putting on an absolute clinic that says when the large chart has momentum, when the large chart says up, when the large chart is screaming in the direction of the trade, I'm just going to go with the large chart. Then GWC, same one. I saw this one this morning and it just made me happy. Termination, full reversal, odds favorable, pull back to support right inside of the triggers, and easy money GWC. What a beautiful trade. Same look, other direction. Odds favorable, coming from a termination. Perfect pullback, out at trouble. GWC, solid. Guys, there's a lot to learn from other people's charts. Go through, look at the momentum, look at the termination that reversed it. And I can tell you right now, GWC didn't have a nervous bone in his body with these trades. Because with momentum and a clear path, life gets easy. And then Gary, coming off of the termination with the 50-50, you let it close back to support large triggers, everything up, and then you take the entry and you get out at trouble. Really nicely done, Gary. Large chart always set up. You let the small chart sort itself out, and then you capitalize on exactly what the large chart said. And guys, again, not a high probability trend trade. Sometimes you're going to see stuff. Pivot, stop out, triggers roll, pull back to the large. Beautiful. Cav, this is one of the things that I've noticed on your trading, and I don't know if it's a conscious choice. I've noticed that instead of taking this entry, you're waiting for that pullback to the large. Is that a part of your plan? Did you make an adjustment? Because it seems to be working beautifully for you off of these termination conditions and buying you a little bit of patience. So really nice. And guys, this is one of the things that I do enjoy about this classroom so much is I get the opportunity to look at your charts and I get the opportunity to see your entries and your exits. And we have these amazing conversations. And hopefully everybody gets better from it. So you're just a great student, Cav. You did a great job. And you realize that you don't have to be first in. But Jas, are you with me? I want you to see this. If you get in right at the trend change, you get sucker punched a couple times. But if you give it just a second, man, you can still get in really close to the bottoms. And you'll find your way to do that, man. You definitely will. Not a lot of pictures this morning. Market's just not playing well, is it? That happens on a Monday after things explode. 50-50 fails, odds favorable, clear path. Yeah. Haji, can't see what you did wrong. Let's see. Not a good bottom, right? Because the triggers got through. You had odds favorable. You had a clear path. You had an area of support inside of favorable large triggers. Hold on. Let me do it again. Let me just make sure. I'm trying to find a way to beat you up, Haji. You had strong triggers. You had no terminations. You had an area inside. Yeah, but Haji, with all the rules met, you didn't blow it. Not at all. So, man, this is a high probability trend trade. It's a great trade. It's an awesome trade. It is an everything advantages trade. And you can take it without a good top or bottom. Because there's the advantage of momentum, a clear path. All that good top or bottom does is it gives you a little extra giddy up. But you've got everything met. You've got a perfect entry. There's not even divergence. Man, Haji, all day long. Beautiful trade. I would take this trade with you. I wouldn't hesitate. You've got one line where the market is likely to continue, Haji. One line where it's likely to continue. I think your stop's appropriate. Maybe a tick or two too much, but I think it's appropriate. It gives it just a little bit of wiggle room. All day long, man, I would lose this one with you. You and I would pick up the phone and FaceTime and go, "Did you just get your ass kicked, Haji?" "I did." And be like, "Yeah, I did, because I had every advantage. It just didn't work. They wanted something else to happen." And what happened, man, is they got caught in that consolidation. And when everything's set up, the sellers said, "No, we're going to stick to our guns and drop it." So every time, man, it fits the rules. You even wrote that it fit the rules. And I like that you still second guessed. And that's pretty normal. Is people will take like this awesome trade and they're like, "What did I do wrong? What should I have done different? Was it this bounce? Was it that? Was it these? Was it those?" And if you just keep it simple, oh, everything was perfect. It's just a cost of doing business. It keeps you from beating yourself up when you shouldn't. I love the trade. I would take the trade. Joel took the trade because it fit the rules. No, Joel, you went short against momentum, against everything, not from a termination. Joel, I don't understand your rules. Does your white bar trade not have to come from a termination? Does your white bar trade not have to fight all of the triggers? Does your white bar trade not? These white bars are going to get you in trouble. Guys, if you don't have a plan to take them, they're going to get you in trouble. Look at this one down here. There's a termination. There's a roll. Everything on the right side, there's a white bar. And that one runs beautifully. You're just not coming from anywhere. And I know why you did what you did. That would be one of those half-truths. That would be the market allowing you to be lucky. But you went short at the entry for a high probability trend trade. And then Jen says, "I'm just waiting. Don't see momentum." There was momentum. There just wasn't a clear path. And then Jen, if you took this one, I'd get on board with it 100%. because that was the termination, that was the reversal, you know? Like, I could get on board with that long. I see no shorts. Even this 50-50, nope, divergence. Gosh, I might even lose this 50-50, Jen. Because the termination, the reversal, the odds favorable, the area inside of favorable, there's a good chance I would have went ahead and got my butt kicked on that one. And then when that 50-50 fails and then that one fails, that's where you go into that, all right, let me wait a minute moment. It's a great read. And that's awesome. Wait for that clear look. But let me do this, Jen. What do you think of Haji's look here with the triggers up above the large, haven't hit the termination in an area of support inside of favorable large triggers? I think that's a pretty good look. It's okay to choose not to take it, but I think that one fit the rules. What do you think? Could I defend this one in court? Maybe when you get better. You are better. Right now you're trying not to lose because you got a little aggressive for a little bit. You started chasing a little bit, and now you've reeled it back in. And you'll find your balance between the two, Jen. Really focus on rules met, rules not met. And be okay with the idea that you're going to lose a couple even when the rules are met. I'm telling you guys, it takes the burden of trying to figure out what's wrong. Strong top, everything down, 51.92, 51.92. Smalls break, momentum style trade, and you're down there. Cool. And this one is just a momentum trade that doesn't have momentum. I'd rather have odds favorable and a clear path than weaken triggers into a fib. That's just me, though. Call me crazy. The smalls break, but I'm looking for momentum, and I don't have odds favorable on the small chart. I have a loss of momentum on the small chart. I don't have odds favorable on the large chart, and I've really only got a fraction of a bit of room to get there. But this is the beauty of it, is that you're going to find the looks that appeal to you. You're going to find the looks that you're like, man, this is the one. This is easy. And Jen, it's funny because I love trend trades. And I like this look, but it's so funny. I rarely catch them short, and I rarely miss them long. You do. This is your trade. Where does your stop go? So I love it. I like the look and your patience in letting the smalls break through and going with strong for the strong top. I don't disagree with this trade at all. Where does your initial stop go? Do you get in on the way down or are you getting in on the way up? That would be the only thing that I'd want to ask you because you know your entries. Do you have a management plan? That's the second part. So rock star entry, consistent with what you do, trading from a great top, trading with momentum even if it's not the best, letting the smalls break, it's hard to find anything. And you get in on the way down? Beautiful. That's a Ron trick. Getting in on the way down, you know exactly where your risk is. I love it. 51.98. Okay. Nice job, Jen. And guys, remember, I don't have to take your trade for it to be a good trade. It doesn't have to be in my plan. I just look at advantages and I ask questions. Great bottom. Pull back to the large triggers. However, the split, is that what got you? Oh, the 50-50. That's actually a termination right there. No worries. And let me show you something on this one, Jen, because you're good with momentum. And Cav did a great job on this one too. And it all starts 100% with, hey, Gary, whoops, with that termination condition. And Jen, this is the beautiful part. When you get that no triggers through termination, that sets the tone, right? This says, wow, we're creating a bottom. And then you get that initial push, that so hard off of it. Notice that your small triggers are up and strong. Notice that your large triggers have already rolled. Notice that you're in the momentum phase. That little pullback right to the large triggers is one of the most effective ways to use that momentum off of a great termination condition to get up to that midband, to get up to that problem area. And it gives you a pretty straight run right to trouble. Does that make sense? Yeah, and that's okay. And that's okay. That's okay if your brain said, we had such a big move that I'm not going to do it. So let's talk expectations. Weak triggers, right? Potential for a higher pullback. Divergence from a fib, potential for a higher pullback. I totally know what you mean. So when I have one of these big moves down, Jen, this reversal bar directly off a term lets me know that there's buyers in the water, that there's buyers that are testing. There's buyers that are pushing back. And notice that they did it right from a key area. I'm sorry, I still get amazed at the software sometimes. So let's go through order of operations. If a termination reverses the market, it's a strong bottom. It's a good bottom. If the smalls are outside of the large, it's momentum. If it hasn't even reached the mid band yet, I've got a lot of advantages there, and it's okay to not take this trade, but there's a lot of things right, and it's difficult to find something wrong. And then only you can make the decision on whether or not you're willing to risk. And this is what I was telling Cav, the mid band I don't care for. Let it come back to the small triggers on the large chart, which is the large triggers on the small chart. And Jen, there is a picture from 2003, 2004 that is this picture right here. Yeah, and if it moves fast, it's tough. But it's the exact same look that my brother started teaching that look in 2004. So it's got an amazing history, and it's certainly a great trade once you get comfortable with it. All right, Cisco, that's the same look, missing a fib down there. You don't have your synthetics on. And this is the one where I say, when it's like this, let it retrace back to that large trigger, and then it gets easy, Cisco. Does that make sense? Did you catch that lesson? When you're coming off of that fib, and man, you don't have your synthetics in place, so you're not even seeing the fib down here. But when it smashes off of that fib, very often it's going to pull back to the small triggers, which is pretty much the large triggers, and you can eliminate these. You saw the momentum and you hung in. You just kept adding on. Great trade, dude. It's fun seeing a couple of you guys taking the same thing too. Then Cav, weak top, all sorts of momentum. 23. So you're actually in way down here. You're pointing at momentum up here, but you're down here. 50-50, one divergence, and you catch it on that little fluctuation after the reversal bar. I love that. Money, money. And guys, here's the deal. When we talk 50-50s, and Cav knows this, but a lot of you don't. You're like, but Mark, a 50-50 is less likely to work if it's a bad top, right? It says so on the KISS plan. This 50-50 worked. This 50-50 worked. This 50-50 worked. Man, that bad top already has proven itself to not be much of a challenge. And then by the time you get down to this 50-50, we're below everything. Everything's down. And Cav, I love it. Great trade, man. And then Haji, bad top. Super gap all the way to the synthetics. Great patience, Haji. And you waited for that bar to start its way down, didn't you? So Cisco, on your large chart, right click on it and go to indicator. I'm sorry, not indicators, my bad. Right click on it and go to data series and make sure that tick replay is put in there. If it's not, it won't pull those fibs over from the other time frames. And if it is, you may need to rebuild. Oh, you can't use Bloodhound? Okay. No worries. Then as long as you can look from your small chart and look over, you're good. All right, guys, check it out. Market can't make it. Pushes all the way down. And when it retraces to Fibonacci resistance, nothing blinks. Those large triggers don't even blink. Haji says, hey, Mark, these triggers are split, so I'm going to wait for a little bit of confirmation. I know that it might come up to here, but I'm not going to jump in arbitrarily. I'm going to let it start to reverse. And man, what a great job. And then held it all the way down with that momentum. Haji, I love everything about this trade. I love the patience on the entry. I love that you let it start to move in the direction of your trade. This is everything that we've talked about for the last 2 weeks, coming into an absolutely beautiful trade to the south side. Nice job, dude. I hope that one felt good. That's a great chart read and great execution. All right, Miss Cindy. Let me see which way you went. So you went short. You went short against triggers. You went short against direction. You went short against momentum. And everyone's like, oh my gosh, Cindy, you can't do that. But you're like, but look, guys, it's weak triggers. And it's right at these 1-to-1s. And I had 1, 2, 3 divergences in the same price range. And I know that this is problematic. So maybe a little premature. 3 divergences down, 2 divergences up. You're just in that fight spot right there. And you said, I'll give it a little room. And that's a hard one to take. And when you take it, you look awesome. But with the smalls up, but the larger rolling, I love to let it close back to the large. And that was, did you catch that lesson earlier off the terminations, letting it close back to the large? Because that's kind of like it closing back to the smalls there. And your smalls hadn't even rolled yet at the time of getting in. And that's a big deal, letting those smalls roll a little bit. I love that you got paid. Nice job. That's a tough one. That's where a little bit of patience pays dividends. Instead of hoping that it holds and breaks, let it hold and break, right? Nice job. I know exactly what you were doing. Oh, thanks, Cisco. Thanks for being here and posting. All right. All right, Jen, let's talk through. So here's the biggest one. Are you ready? You're going to hate this. Oh, stupid Mark. What are your rules for exits? You said that your exit would have been at the 1-to-1s. I say the 1-to-1s are support inside of favorable large triggers after a good bottom with odds favorable momentum. I probably wouldn't exit there. So Jen, call me crazy. If you were in right here, is there any reason why you can't get paid here? Is there any reason you can't use these amazing Fibonacci areas and go ahead and make, oh my gosh, that is 9, 11. On a 2 lot, that's like 20 points on the S&P. What was that, $800? Jen, you're a badass. And I think all of you guys forget that. Is each and every one of you, I mean, Gino, Cav, GWC, Cisco, Donna, Josh, Muser, all of you guys are badasses because you're chart readers. And once you're a chart reader, you know where the market is likely to stop. You know where it's likely to continue, and you know where it's likely to go. And guys, there is no shame in getting paid than waiting, right? Jen, that's resistance with no triggers through. It'll be a cold day in hell when I give back 7 points of my profit, hoping that resistance with no triggers through breaks. Does that make sense? In my own world, if I think that this might break, at the first fib, once I get above, I'll put my stop right here. Once I hit this fib, I'll say a reversal bar takes me out. I'm willing to give a couple ticks. Let me see if I can find an example of that from this morning. There were 1-to-1s on the large chart right here. I was willing to give a couple ticks in case it broke, but I'm not willing to just hope that areas break. So this was the same style. I took the long. This was trouble. There's my first contract out right at the 1-to-1s. And I said, you know what? I'll protect myself behind this fib. If it starts to go down, I'll get out and I'll wait for the next best trade. And Jen, my goal is to get paid. My goal is always to get paid. My goal isn't to be the hero. It isn't to hope areas break. So if you're in at 83 and you're out at 92, that's 11, right? And 11 is 4, 8, 12, 300, like 275 a contract. Do it on a 4-lot without hoping, right? Make $1,000. Shut it down. Go play golf. Play with your dogs. So that's my 2 cents on it. I think waiting for the 1-to-1s is ridiculous. Because that's a termination condition, right? Take a cold plunge, whatever. Whatever works. But guys, this is the beauty of the classroom. Is all you have to do is post a chart and ask your questions, and then we'll talk about it, the whys. And my exits don't have to be your exits. But if you're one of those people that's using like Apex or something like that has a trailing drawdown, it becomes challenging. You miss this one, good bottom, odds favorable, small above the large, pull back, no divergence. You would exit at the first fib, a rules-based trade. Amen, Muser. Great job. And that would have been a beautiful trade. But the cool thing is, and I want you to see what Muser did, and it's probably Muser, but Muser makes me smile. He didn't take the trade, or she didn't take the trade. I actually don't know which. Can't tell. But went back to annotate it, to talk about the advantages, to point out the entry, to point out the exit, so that maybe next time it becomes easier to catch. What a great job. And then Gino, everything says down and you sell. And it looks like it has the potential to break. And you get out in the middle of nowhere. Oh, NT crashed, so you had to exit trade of 8. I love it, Gino. Great top, everything down. You have the potential to break. That's probably the same entry that Jen took. And just ride that thing down. You and Jen are in cahoots, it seems. How was golfing? And yours didn't even have momentum. Nice trade, man. Should have won the Masters. I was rooting for you. I figured Gino was a code name. Paul. Let's see what you did. Great top, odds favorable, clear path, perfect entry, lot of risk. You beat Tiger. You know, I still couldn't beat Tiger at his, what was he at the end of it? Like 14, 15 over? That's a great day for me. DFL. And I knew exactly what that meant. Paul, I agree 100%. This is a next scenario. The only thing, and guys, I want you to see one of the advantages of understanding where the market is likely to continue is that's it. It's okay, should you choose, to put your stop just beyond it. Take smaller hickeys. Nice trade, though, Paul. I mean, the setup was perfect. It just didn't work. Gary, weak triggers from a low. They reverse. You take a momentum style trade, and you're out there. Cool. Nice trade. Triggers roll with divergence. Gary knows that mid-band has problems. Let me see if I can trade to it. Great job. Marum, going long. Weak triggers, strong triggers. You pull back to the mid-band, and you're looking to get up to the other side of resistance. Marum, great job. Odds favorable leads the way. Weak triggers with divergence. The expectation, my friend, weak triggers with divergence, I'm looking for that mid-band. That's my first spot. I like that you're protecting yourself as you go into it. It's okay to instead of taking the full 300, take that 270. Get paid at that trouble spot if you feel so inclined. I don't give trading advice. And then clear path, weak triggers. How did you pick your entry? Just curious. What was that magic voodoo that got you in on your entry? What made you believe it was going to bounce right there from the middle of nowhere? And this goes back to, guys, I can help you. I can help you if you tell me why. So, Marum, I'm not going to beat you up, but I'm going to annotate your chart with what I see. Not a term, bad bottom. Weak, anything can happen, triggers. No advantage of momentum. But I do have a clear path. Rule 2, Matt. No areas inside of favorable large triggers. So if I just look at your charts for grins, Marum, I have omitted rules 1 and 3, which means I'm relying on a clear path to pay me. Does that make sense? So I'm not saying that it's not a great trade and I'm not happy about what happened to you, but my goal is always consistency, right? Like, how can I do this over and over? How can I do the same thing over and over? Notice on this one, whoops. On this one, where did it go? You had odds favorable momentum. You had room to get to the target, and you even had a mid band there at the trigger to bounce off of. This one's easier. Great job, though. I love the first one more than I like the second one, but I'm glad to see you trading with trends. I'm glad that you're recognizing the path, and maybe we can just get the probability up a little bit. What's the problem, George? There's dots, and there's dots. What template do you have on there? So go like this. When it looks like that, I want you to do this. I want you to take your chart, and I want you to click on it and then hit F5. And see if that clears it up for you, George. F5 typically puts you right where you need to be. I don't know what the movement is fake means, but try that F5 and let me know if it works. And if for some reason it doesn't, that's where I would encourage you to get with Jason. Guys, bad top, not really even a 50-50, split triggers. Woo. I need to make sure I'm on global simulation mode. And let me know how that let me know how F5 works for you. Guys, can you see how we don't have rules met for a short just yet? Bad top, it's strong triggers, split. It's not the best look. That fib is kind of messing up our good time. And now on the S&P, I'm directly into a divergence high. My triggers are below. I don't have rules met for a long trade either. So this is one of those times where I got to say to myself, man, I'm going to sit on my hands and I'm going to wait for the best. And then Miss Jen, this one is interesting. One would expect price to go to the blue fib, but price reversed prior. Jen, could one still expect price to return? Could we say, let's do this, could we create the expectation that from a bad bottom, when it gets to the mid-band, perhaps it will finish the move? But we may have to let it dance a little bit. And I would not consider this 3 in the same price range, because you see how the small and large got above that one? So you're just in a holding pattern. Large down, small up, synth down, large up, divergence. Everything's below the fib. And they're trying to figure it out, right? But Jen says from a bad bottom, one could expect the fib. So I'm going to put your prediction on the chart, Jen. And what it means is if you know that when a bad bottom goes to the mid-band, it's more likely to continue down, doesn't that at least keep you from trying that long at 79 that just happened? And doesn't it get you set up to start thinking about, wait a minute, maybe I should be looking for opportunities short should they arise rather than hoping that the long works? So Jen, I think the fact that when this happened, you created this expectation is brilliant. And then your patience, because it's not perfect yet, right? So even though the expectation is down here, Jen, what happens if we get strong triggers somewhere up here? You're not married to it. You're just like, oh, well, shit, it changed. So we'll see what happens. But I've got a termination condition above. I do not have a termination condition below. I've got smalls above the large, but the large are flat. Decisions. Jen, great chart read. Absolutely perfect chart read. And the fact that you're willing to say there's just nothing for me to do yet is awesome. No rules met. It doesn't all have to be yours, does it? And Jen, there may be a point in your life where you say, wait a minute, bad bottom, band, pivot stop out at a mid band with 1-to-1s and a reversal bar, hell, I'm going to give it a shot, at least to get down to here. So what happens is your ability to read charts and the expectations that you create based on the patterns eventually work their way into a trading plan, creating more advantages. I love the idea of a short up there. My range chart doesn't appear to be coming up. And that's exactly what we want, Jen. So take that picture, right, and go to your spreadsheet, and under patterns that repeat all the time, drop it in there and like study it and go, hey, wait a minute, I see this one a lot. So much so that maybe I'll go short right here, right? And I'll put a target right here. And I'm not saying that this is a trade, ladies and gentlemen, but that's a termination condition. But what happens is eventually you put things together and you change your approach to trading the market. You change the ideas that maybe when the smalls are through, when the momentum is strong, the pull back to the 1-to-1s, I'll put a little bit of risk on this trade to see if it makes it to that fib, that expectation. And it may not, because it is a termination condition. And maybe it will, because this was a bad bottom, because that was a good top, because now everything is pushing down and all my charts agree. And maybe there's an opportunity here. And guys, you have to decide what's right for you and what's not right for you. And our expectations aren't valid, but we can see if our rules are met. And our rules make it a little easier. And then long into the termination condition, yeah, it just didn't work out. Misread. And to get out break even is brilliant, Gary, because we all make mistakes, and it's awesome when you can make a mistake but recover and not lose money and not sit and hope that it works, but just rather say, man, I broke my rules, let me get out real quick. Great job on that. That's hard to do. Even me, if I break my rules and I'm like, oh, I just broke my rules, I've been known to just go ahead and take the full loser when I had the opportunity to break even. So nice job on that. I'm trying to recalculate my range chart. Gino told me to look at it, but I don't have any indicators on it. And once it comes back up, I'll be curious to see if that made its way down or not. But guys, we made it. Look at that. It's still going, huh? And it pulled right back to resistance inside. Hey, have a good one, Cab. Go defrag it. So guys, I'm going to leave you with this chart. I'm going to go take a break and relax a minute and walk away if my rules haven't been met. So I'll be back in about 5 minutes. When I come back, it's the last hour, guys, and the last hour is on you. So last hour is where I want you guys asking questions, where I want you posting charts. We've hit every chart that you've posted so far. I've answered no questions because I haven't gotten many. So it's on you for the last hour. Think about what you want to ask. Pretend it's just the two of us. I'll see you in a couple minutes. Hey Siri, set a timer for 5 minutes. too. Ellie, go get mama. You gonna stay with me? She doesn't want the door open, baby. Come on, go. Go get mama. Jen, how did you get so smart to create that expectation from a bad bottom into the mid band, everything down? I mean, seriously. Isn't that cool, though? Isn't that awesome? And you know what, Jen? It's funny because I'm going to show you when I started trading, and I had been doing it a lot longer than you had been. I was in this long about right here, about the time my brother said, you know what, this is probably going to be the push down to the fibs. And I would get run over and over and over. And then once I started reading charts a little bit and started creating these expectations, it made it a little easier. So 50-50 trade, one divergence from the mid band. It takes a shot, second higher divergence, and it comes out. Great job, Jen. It's fun when it happens, right? You're like, ooh, all these lessons. What kind of look is the first circle giving me inside of favorable R sugars but doesn't get to a line of decision? Rob, that's up to you, man. You can take this pullback. Where does your stop go? That's the only thing you have to ask yourself, Rob. Where does my stop go? If I just jump into the market with a clear path and odds favorable, where shouldn't the market go? And that's where your first stop has to go. And a lot of people let it start coming back down. And then they jump in and they'll put a stop above it. So you just have to know a plan because there's nothing to hide behind. And then this one is just, it's weak triggers, it's divergence, it's weak triggers. It's easy to say, oh, look, the mid-band was the perfect trade. But the reality is you don't know that it's going to stop at the mid-band. So again, you've got to wait for some sort of indication that the market's going back down. It's a great read on the large chart. You've got to have rules for entry. You have to have rules for stops to make it easier. Paul, 50-50, one divergence, HVA line. And it looks like you got your first target, went break even, and then we know that it got you on the break even. Great job, guys. Isn't it cool? You don't have to be in every trade to make money. You don't have to hit a home run to make money. Nice trade, Paul. Good top, 50-50. One divergence, strong triggers. You get in at the top of the window so your risk is minimal. And that gives you room to manage to trouble. Nicely done. Gary, 3 divergences. Looks like termination, triggers below, and you said, pshaw, I'm not going long into that. That's pretty, but I'm not going long into the terminations. Great respect on those termination conditions. I love it. And guys, now we just have to wait and see, right? Is it going to go up? Is it going to go down? Are they going to continue down? Are they going to continue up? I don't know. I don't have rules for this trade. Here I have weak triggers and a clear path, but I don't have areas inside of favorable large triggers. How do you make a decision? Is this overrun? Man, I don't know. Is the mid-band going to hold? I don't know. Which mid-band? Is it going to be the large chart or the small chart? Hell, I don't know. The only thing I'm sure of, guys, is that my rules aren't met. That's it. It's the only thing that I'm sure of. $50-50 divergence. Just talked about it. Okay, no, that's okay. I love the first entry, and Paul took the first entry, and then this is your management opportunity. Does that make sense? If you take the entry because of the good top, this is your management opportunity. Guys, remember when I said on the 50-50s Take profits at the first trouble area. It's okay to make $100 and go break even. And that's exactly what Paul did. And Paul's looking pretty darn smart after that thing popped up. So I think it's a very valid entry on the first pullback. And I think that the second higher divergence tells you to pump the brakes and be just a little patient. Does that make sense? You were probably annotating the chart while I was talking about it, which is cool. No worries. What do you guys want to talk about? You guys know that this is the part of the classroom where I just start going through all the stuff I have, right? How about this one? Things you have to know before you get into the market. You have to know your rules for entry. And then you have to know what your rules for exit are after you enter, guys. And that depends on the trades. Need to know your daily goal so you stop when you hit it. And you need to know what your daily stop loss is. And don't try to be the Superman. It only takes one trade to get it back. All right, let's see what we have here. Odds favorable, 50-50, one divergence, great entry. Two divergences, you decide to hold it, and then when you hit the pivot stop out, you're out. Break even, George? Oops. Where is the make it bigger? Hold on. So a couple questions. Or let me make an observation, and maybe you'll enjoy this or maybe you won't. I don't know. So your entry was 72, right? So that's a 1.5 difference. It's a 1.5 less risk. It's a 1.5 more profit. Taking that area inside, and it was beautiful. If you get in at 72, man, you've got 2 ticks of risk on this trade. You have room to get paid at 100 and go break even because your large chart is 50-50. Your large chart is anything but ideal. So if you were going to hold it, whoops, wrong way. It just makes it easier. Maybe an opportunity to make a little more money in there. Termination, reversal, directly into a termination. Man. Isn't it cool? That says don't go short, which means there's never any reason to lose a trade there. Get rid of that checklist. All right, I'll share this one. To minimize your learning curve, post your pictures in every trading class. Guys, it's hard to do as a new user. It is absolutely terrifying to put yourself out there in front of strangers to risk being wrong. But you know what's worse than asking for help is needing help and not asking for help and letting your pride blow out accounts because you don't want to ask for help. What would Mark think of me if he thought for a second that I wasn't the best trader ever? Mark would think, thank God, job security. Guys, I want to see everything that you're doing. Because if you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How are you going to know the difference? You need feedback. Guys, I needed feedback. John Novak still gets feedback from me. He hates it sometimes. But feedback, guys. Feedback is where it's at. I learned so much from the feedback that I got from John. I learned to stop trading into termination conditions. I learned to quit fighting large chart momentum. I learned to stop forming opinions and follow my rules. And this is all part of the educational magic, guys. For 15 hours every week, I am live. And my sole purpose in life is to give you feedback on everything that you're doing. And then this is for you, Troy. and the rest of you guys that are new, um, experience and time. I love, love, love this chart because it's fun, man. We all get into it because it looks like fun. I got into it because I had 2 spine fusions and couldn't go through, couldn't go back to my career. Um, and at first you're like, oh, this is going to be great. And then you have this little realization about 2 days in, you're like, well, shoot, I'm going to have to learn some stuff. I'm going to have to take a minute and I'm going to have to learn some looks and I'm going to have to figure this stuff out. And about 30 days in, you have been sticking to your checklist and you've been taking pictures and you were like, yes, I'm the best trader ever. And this is where all of us run out of talent. And this is where I lost 5 grand almost instantly. It took me 2 hours to absolutely decimate my account. And I had no idea why I had lost. I had no idea even really why I entered the trade. I didn't know how to manage it. And guys, I got shuffled back to the I don't know shit stage almost instantly. And I think anybody in this room, everybody in this room, here, let's do this, guys. Help me out for the sake of the new kids. Who has hit that stage? Who has hit the I don't know shit stage and wrestled with whether or not you wanted to continue trading or whether or not you wanted to quit? Guys, I think we all do. So if you've ever hit it, guys, you're not alone. But I'm going to tell you right now, this right here, and this is up to you guys, whether or not you want to move forward or not. But when you hit this stage, this is where you have to make the decision to follow the path, guys, because doing it your way, not learning the rules, breaking the rules, taking chances, not getting feedback, not using the spreadsheet, doing it your way didn't work. And I know because doing it my way didn't work. And I almost quit. I almost wasn't here today. And this is where I had to do, no, it won't. Troy, it doesn't have to anymore. Because now we have these prop firms. Now we have these where you can trade other people's money and test your plan. And it's amazing. It's amazing. It's not going to cost you 5 grand. If it does, you're doing it wrong. But what's cool is right about here, you start taking pictures. And right about here, you start asking for feedback. And right about here, you share your plan with me, or you even have a plan. And I'm going to tell you right now, I'm looking at names in these rooms from people that I know aren't finding the success that they want yet. And for whatever reason, you absolutely refuse to share your charts with me. You refuse to ask for help. So here is my favorite uncle, grandfather, arms open. I love you. Let me wrap my arms around you. Let me help you if you need the help. But the only way I can do that is if you let me. But it starts to make sense once you begin to follow the plan, once you stick to the plan, once you have a plan. And then it just gets better. And then Jen, you just had that, did I do that, right? Jen came in and went from taking everything to only taking the best and sitting on her hands and recognizing patterns. And you're like, whoa, I might be good at this. And then you do it, guys. And people do it all the time. And everybody gets there at a different rate. So I love this picture because it's very realistic. Don't let the I don't know shit stage frustrate you. There's a way out of it. You just have to be a student. And then D-Rock says, now that you follow a plan, there's no more guessing. It was rough for a time, but now trading is so much better. Momentum, 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 perfect entry. And D-Rock, absolutely. And guys, if you've been in my classroom at all, I'm very, very hesitant to accept any responsibility for your success. Momentum, momentum, momentum. There's your pattern. Easy peasy. And then you do it again. Let's get more money out of it. Absolutely beautiful. And then one more. Momentum on every chart, and it's easy. D-Rock, I got to tell you, man, it's I get excited. Hey, George, show me a picture of your bottom on the ES. Don't show me a picture of your bottom. Guys, I get excited when you find success. I get excited when it clicks. I get excited when you start following a plan. And it does. It gets so much easier. Why is that a bottom, George? I see large triggers down, small triggers below it. I see on my small chart synthetics down, large down, and I see the smalls down. Can we replace the absolute and call it a potential bottom? Can we say this has the potential to bottom if it doesn't continue down, if my smalls get above? And I only say that, George, because I very much, we went short. Okay, we saw that one. It has the potential to be a bottom. It's just not yet. I don't disagree with your read, but I still have way too much red to think about going long. And because it was a good top, because the market's been moving down, I'm almost more inclined to think this market may continue down. My large triggers continue down. My smalls are still below. My small chart, everything has turned down below. I don't have a short trade, but I don't have a long trade. But if I had to pick a direction and risk my money would be down. I had three divergences, multiple divergences, but I also had it here. But that says down. That says down. Even my range chart says down. And it looks like it's going down. And here's our line in the sand, George. Here is our line in the sand. Is 68.96 going to break, or is it going to hold? And until 71.01 breaks or 68.96 breaks, I can't find a trade. Does that make sense? And I only bring this up, George, because I was the king of getting married to my opinions. And I'll show you exactly what that meant for me. It meant that I went long here and lost, and then I went long here and lost, and then I went long here and lost, and then I went long here and lost. And then when it didn't go, I went short here and lost, and then I went short here and lost. I said, oh man, it's going up without me. And then I went long here. Has anyone else done that other than me? And then you're like, shoot dang. I'm down $2,000 and pissed. And now I don't even care what happens next, because screw this market. And it's funny, right? We can all laugh about it. Oh my gosh. It just described my trading career for like 6 months when I had no idea what I was doing. I was so adamant that my opinions were right, and I'd get so married to a direction that I would take trades, and if it didn't work, I assumed that the market was wrong, not me. So still pushing down, right? George, that is the best spot ever for a potential bottom, without a doubt. It just has some work to do. This is a problem in P&L? It is. The difference between an opinion and your rules met, right, George? I don't have any rules that say trade into a termination condition. I don't have any rules that say trade when the triggers don't agree, really. I don't have any rules that say hope an area breaks instead of let it break. And George, I think that your read of it potentially being a bottom is spot on. And I think that my thought that it may go down from here is spot on. And there's potential for both. Jen, have you ever sat in my brother's class? I love my brother. And Nexgen, Mark, and Cam, don't you guys dare tell him. My brother, for me, when I was starting, Jen, because I'm very artsy-fartsy, it was like having a discussion with Einstein about string theory. And if the rules said momentum, he used to use the phrase with me, it's obvious. Well, it's obvious that you're not going to go long here, right? But it wasn't, because I didn't have the same assumptive that a bad bottom directly into a mid band is more likely to go down than up. So it's obvious became a source of frustration from me. When I would watch his class and I would hear that phrase, it's obvious. It destroyed me mentally. It really did. It absolutely killed me because it wasn't obvious to me, and I felt like a failure because it wasn't. And that's just me. That's my own personal hangups that I have to work through. But what I found is that when I started teaching, so I started teaching a 101 class, and it was 100% based on my frustrations and failures as a new trader. The 101 class was designed 100% around the mistakes that I made and the things that I didn't believe were obvious. And then as I teach this class, guys, I try to teach this class as though you know absolutely nothing, as though you come into this with a 100% clean slate. And that's why I'm so into drilling into you that you have to post in the room, that you really need to use that spreadsheet, that you've got to understand your rules. Because once you understand these rules, I'm not going to lie, it's not that difficult. And once you know exactly what they look like, then it's just repetitions at that point. It's just saying, okay, I know what momentum looks like, and I know when I have a clear path, and I know what my entry looks like, but now I've got to see that look so many times that I can catch it when the market is live, because the market moves fast when you're brand new. But after 6 months, guys, it might as well be paint drying. So I really do. Termination, everything starts to go down. Beautiful entry. And then out at the potential trouble because it is into a termination. Joel, this is rock star, man. Absolute rock star. It's into a termination, but with momentum everywhere and no divergence and the perfect entry, it's still an opportunity to make money. And check it out. Somebody else knew about that fib. What a fight. Woo, Jas, whoops. Do I see any opportunities for short? Wondering if you're missing anything. You want to know the truth, Jas? No. Where did it come from? 94, right here. We're not lined up. One thing, Jas, is you're not showing me the most current information. So, and no, I just don't. There's not an opportunity. It was a giant, huge push down. And sometimes there's not an entry. Sometimes when areas break and everything is screaming, you may add in a trade there, but I don't see any rules-based entries on your chart, which I know is frustrating. Posting chart to avoid. You know what I love is what you call it? No, you're doing great, Jess. You're doing great. You got cut off? Right on. I love that George saw a bottom and that I saw more down. And it's kind of cool that we saw different things, right? Neither of us had a trade yet, but we were both taking our reads and we were looking different directions, and neither of us were wrong. And guys, this is one of the things where if you can open up your brain to the idea that there isn't always a trade, but you look at the conditions, you'll see both sides of the coin. You'll see the idea that it could be a bottom, right? And you'll see the idea that it may continue down. And what you'll do is you'll say, okay, I've got a very definitive spot that needs to break for me to take this trade. And that is one of the biggest advantages of what we do, is our range is clearly defined. Wouldn't you guys agree? There is absolutely no misconceptions about where this range is. So now we can say if the market rolls and gets above 71, I'll look for a long trade. If I get below this key area, I'll look for a short trade. But until that happens, I'm playing Super Mario Brothers off to the side. And maybe it'll move super fast, and that's okay if we miss it, huh? It is, Jen. Because if I take 5 trades a day, I can hit my goal, even if I lose 2 of them. It does sometimes. But what happens is you'll start saying to yourself, so check it out. So Jen, this is a termination. In this termination, the small triggers are rolling. And now price is above the trouble. And now my small triggers are rolling. And now my large triggers are rolling. And I'm almost to the point to where if these small triggers come up strong, I'm willing to look for an opportunity. So what I can do is I can say with this look and the potential breakout, maybe I'm willing to risk a couple on the breakout. Man, I wanted to show you this, guys, because I talked about it. I told you guys that we've been trading that look since 2003, 2004, 2005. Fibonacci holds, pull back to the small triggers. It's the same look, guys, that we've been teaching for 20 years. So Jen, we're in the same boat right now, and this is what we're looking for. We're looking for Fibonacci held. There's your small triggers, and it's probably going to line up where it hits the large triggers. And if I'm going to take a shot at the long from the termination with everything rolling, the pullback to the triggers is right around 72. We'll see what happens. Let's see if it comes up with something. Let me make sure I'm on simulator. But I'll tell you what, if I get a reversal bar somewhere in this area to the upside, that would be my pullback to the small triggers off of a termination. And that feels like a great spot to take a shot if I don't hit anything solid above me first. Does that make sense? Well, mid-band hit, triggers stay down, mid-band hit, triggers a full bar away. It has been. Bad bottom, mid-band, mid-band, right? So absolutely. So what does that mean? That means that I know where my trouble spot is. I know where my area for a bounce is. Maybe it gives a bounce. But things just keep getting better. We're into the mid-band, but the large triggers aren't a full bar away, so technically my mid-band is not a termination condition. No, see the reversal bar marker? I'm on the good side of that, which means that the gap theory is not in place, which means this is nothing more than a 50-50 from a good bottom. Why what, Rob? Why is the gap theory not in place? Because the large triggers have to be a full bar away. And this line right here tells me where this becomes a full bar. So they're closer than that. So now I'm 50-50. I'm odds favorable. I'm pulling back. And I've got one little area right there at the triggers. And if it closes to the synthetics, it may go to 71. But I don't have divergence. It's not the gap theory. Does that make sense? Yep, that's the reversal bar marker. So, whoops. I need John to add that back on. Ta-da-da! It just shows you where that reversal bar forms. And that reversal bar marker helps dictate the gap theory. Ooh, it didn't make it. Should we go anyway? Nah, let's see if they come get us. Where's my window though, guys? I've got split triggers. Is it gonna be this one? Or is it going to be this one? Does anybody know for sure? This is the part that you've got to talk through. Don't have any idea. With a good bottom, with odds favorable, with a clear path, you can make the decision to take it from the top one, maybe, if you want. or you can wait for the bottom one. If I take it from the top, can I just keep it low risk, and if it doesn't hold, take it lower? Man, and it just keeps getting better and better, but there's my termination. Son of a gun. Never gave an entry. Never gave a good one. But George, you called it. You just had to wait a little bit for it to quit dancing, and this is where money gets lost, guys. At that, I think it's going to be a bottom, but it might still go down, and I'm not sure. And look at all the frantic right at the fib. Decisions are made at key Fibonacci areas. We're trying to find a live example. Momentum, 3 to 4, 5 divergences. You may. I did a rebuild not too long ago. I also downloaded all fresh data for the ES this morning. Never a bad idea to do that, guys. Come into the weekend and, come in from the weekend and start fresh. It doesn't take that long. It doesn't take that long to do it. There's a lot of confidence that comes through a fresh rebuild. That's the NASDAQ. There's crude oil. Bad bottom, straight to the mid-band. Check it out, guys. Gap theory. See how it was a full bar away? So I'm not going long and I'm not going short. So we're in the exact same range, aren't we? We're doing the exact same thing that we did on the S&P, and we're in a holding pattern. And now it's 50-50 after a good bottom. I can clearly define where the market should continue if I get a pullback right now. Does that make sense? 50-50, haven't reached the divergence high. I'm from a good bottom. This is just where this bar, Rob, if this bar hits this yellow line, it's going to make a down bar. It's just called a reversal bar marker. So over here, it's the exact same thing, but on a faster chart. So at 51.7875, this bar becomes a reversal bar. That's all it is. And then we use it on the large chart when the triggers are a full bar away. That's when that gap theory comes into play. So now we have our reversal bar. We have the potential for divergence. If divergence prints, do we cancel or do we take it anyway, guys? Help me out here. Cancel or take? First answers, they're the plan. Jen says take it. You're willing to take a 50-50 with divergence? Jess says no.
Order canceled.
Exactly. But on a 50-50, Jen, divergence can kill it, right? Remember the KISS plan? Ah, yes. So that goes back to you have to understand what kind of trade you're getting into so you know your rules. Now I'm at a termination condition. Now I've got divergence. Split triggers. Termination. Divergence. Man. What do you guys think? Some of you are going to break the rules and get lucky. Some of you are going to say my rules aren't met. And it's hard to say that my rules aren't met. No tard, no trade. And you know what makes it even harder, guys, is if it goes up from here. If the market decides to continue up, well, then you're like, man, I knew it was going to go up. I'm going to break my rules next time, right? And you're going to take that short trade and it's going to kill you. And you're going to take that long trade and you're going to lose. And you're going to take that short trade and you're going to lose. And you're going to take that long trade and you're going to lose. And you're going to take that short trade and you're going to lose. But you're going to remember that one time that it did exactly what you thought it was gonna do. And that brings us back to, we trade a statistical advantage. We trade having an understanding that our entry is based on patterns that are repeatable, that our entry is based on things that happen over and over and over. And that's it, Jen. A 50-50 with one divergence goes outside of the KISS plan. As you grow, you may say, I'll say in my plan, I'll take a 50-50 with one divergence if it's from a good top or bottom. But that's not the best way. That's not the way that optimizes your chances for success. And guys, my promise to you was to give you a plan that optimizes your chances for success, with the understanding that you'll create your own plan based on your ability to read the indicators. So I blanket you guys very much in the beginning. Let's go to that one. I'm coming up with all the stuff I have. And we're just going to read through this one unless you guys have a question. The key to all of this, guys, is having a foundation, understanding the basics, and then compounding a little bit each day. So for you guys that are brand new, you're like, oh man, I'm so excited about Nexgen. This is probably what your world feels like right now. There is so much information coming at me. There's so much that I have to learn. There's so many things that I need to do to be successful. But the reality, guys, and the truth of it is that if you keep it simple at first, if you commit to learning about momentum, and then you look to add to your understanding of momentum rather than looking for the trade, you're good. So for you new users, I blanket with very conservative rules, the recognition of advantages, that solid plan that optimizes your chances of success. You won't be good at it on the first day, the second day, or even the third day, Troy. But if you come in and you commit to getting a little better every day, there's no doubt in my mind you'll get exactly where you want to be. So for the new users, with this blanket theory, all termination conditions are bad. Without question, no hesitation. If you trade into a termination condition, you broke your rules. It's not a part of the plan, and it's not your best chance of success. Same thing with no momentum. Same thing with not having areas inside of favorable large triggers. And guys, they're not always bad. There's times where I'll take them, where I'll forfeit momentum, where maybe my entry isn't inside of triggers. But until you have the experience to know, it's just safer, right? And then just like anything, the more time you spend with it, the more you're going to see, and this is going to open doors for all of you. But one of the biggest challenges for new users, and guys, this is one of my biggest challenges as well, is you'll see more experienced traders taking trades that don't fit the rules. You'll see more experienced traders that seemingly win every trade and they never lose. And I'm going to tell you right now, and pardon my French, it's utter bullshit. If somebody shows you nothing but winners in this room, it's because they're hiding their losers. Period. That's it. Nobody that I've ever met in the history of trading avoids losers 100%. Even the most brilliant traders that I know still take losers, but they're okay with it because they take losers that fit their plan. So don't compare your plan to someone with more experience. Don't compare your abilities to somebody with more experience. They break your rules, but they follow their own rules. And you're building your rules through recognition. Because once you get some time watching these patterns, you find that you can trade into a fib and you can manage it because of the other advantages present. The volume was still in May this morning, Paul. And with a little less than perfect momentum, I can get in and manage. And my entry, not at the best spot, I can manage because I'm a chart reader now. So if you guys learn the process that yields the results tend to follow. If you worry more about the execution rather than the result, it's easier. And that's where the KISS plan comes in for you guys. If you keep it basic, if you follow simple rules, it's okay to not keeping up with the Joneses. You really can. You really can find an extraordinary level of success. Today, Rob, but the volume, when it's split, I always check the volume in the mornings on roll dates, and I look to see which one has more. And 5 is still trading. It was 3 times higher, 75% more. So Today is the roll date, but we're waiting. Yeah. Um, and then, guys, the further new users deviate from simple, the longer it takes them to learn to be comfortable with pattern recognition. This is gospel truth etched in stone. The more you look for, the less you'll find. The more you deviate, the harder it is to become proficient. And the more options that you give yourself for trades, the more confusing it becomes. So question everything. I encourage it. And I want you to learn, but give yourself a little grace. You are new. It's okay to be. And guys, this was written because I had someone send me an angry email. Mark, this is utter crap. There's people in the room trading in determination conditions, and I saw somebody go counter trend, and this person did this, and this person did that. Guys, squash your desire to be the trade police. Rules kept you from the long, Jen. Nice job. Don't become the trade police, guys. What do we think about this one, though? Termination. The smalls are rolling. There's some large triggers. What do you suppose? If you get a pullback to the small triggers from a termination, Paul says no. How come, Paul? Are you suggesting that I shouldn't fight that? All right. But it's my opinion that the market's going to go down.
Order submitted.
No. I've decided. Look at my small chart, guys. But, I mean, but my small triggers are red. Are you sure? Because I really want it to go down. I really need it to go down. I mean, my synthetics are up, but my large are down. But my large triggers are up. Oh, my smalls are above them. Oh man. But I really want it to go down, guys. You're gonna do that.
Order canceled.
Or the worst part is you're gonna say, but the large triggers are up,
Order filled.
so I'm just gonna go long right at the mid band. And you're gonna say, oh wait, but that says down. Let me reverse it.
Order.
And I go, oh no, wait, but it's going up. No, I need to go up. Shoot. What do my rules say? My rules say sit on your hands, guys. No, Jen. I don't fight stuff. It doesn't do any good.
Filled.
But my rules say this is the area that has to break if I'm going to consider more up. But they're on the wrong side, Rob, and that's the challenge. My smalls are still above the large. Yeah, Jen, we all did. My large triggers say up. My small triggers are above. My synthetics are up. Guys, there wasn't a short trade to be had. You're absolutely right. But I can't go long into the termination. And guys, I think today's been a pretty cool example of how you have to sit on your hands for a little bit, how you have to wait a minute, how you have to and believe that your money is worth the best of the best. And guys, all I'm going to do is I'm going to help you. I'm going to help you with chart reads. I'm going to help you with understanding. I'm going to help you with rules. And termination. You went long somewhere against everything directly into a termination. And that's twice now, Gary. Last time you exited instantly. But weak triggers into a fib. Why hope? Why hope it goes up? Even without divergence, that is a textbook termination condition. That is straight out of the book for financial suicide. You made 250 today, it's enough. In the past, you would have lost many grand. You're very welcome. Thank you. Thanks for taking the time to post. Thanks for taking the time to ask questions. Thanks for showing me losers. It was hard to show me losers, wasn't it? Guys, I'm pretty gentle. I really am. I'm pretty gentle with you guys because I'm a touchy-feely kind of guy. And I hate getting my feelings hurt. Paul, hate posting it, but it must be done. So, Paul, here's part of it. What do you suppose went wrong? Rob, that's awesome. Because your annotations don't indicate. They suggest why you took the trade. Termination. No areas inside of favorable large triggers. So yeah, go into it. It wasn't even a bottom, it was just a termination. But Paul, write that down. And I know that you're like, but I know. Sure you do. But if you write it down, I traded into a termination condition and lost. How many times do you think you can write that before you get sick of writing it? My answer was about 247. I traded into a termination condition and lost. And Paul, I had to write that on so many charts. But eventually, I started believing it. And if you come back and you look at this chart tomorrow, you're like, but I had strong triggers and I had momentum and this is just the market being an asshole and it has nothing to do with me breaking my rules. When the reality is that is the most visible, teachable example. And guys, I don't tell you to annotate your charts because I think that you need to be busy. I tell you to annotate your charts because you're committing these looks to memory. You're committing these successes to memory. You're considering, or you're committing these challenges to memory. Man, termination, it pulled right back to the small triggers, didn't it? Is it just me? And that may not be your trade, but doesn't that look an awful lot like 2004? Termination, it didn't have fibs. Pull back to the small. That's at least a pattern I can recognize. It also pulled right back to an HVA line. Just saying. Guys, I would have gone short all day there. You couldn't have kept me out of that short off the HVA line with the reversal bar off of it. But it just doesn't have a lot of room to go, so you'd have to manage it quickly. And if you don't know how to read your charts yet, guys, that's pretty tough. So, 1150. How'd we do today? Troy, is it a little better than it was yesterday? Who else? Jess, is it a little better than it was a couple days ago? Hey, Tyree's in here. I haven't seen you in a while. What's up, man? Good. Guys, because I know that it's overwhelming in the beginning. I really do. I know that it's overwhelming. I've been overwhelmed myself. And I'm telling you from my own personal experience, just let it be easy for a little bit. I promise you, there's a million trades that you guys can take. It's easier to wait. I don't want you guys to go through the challenges that I went through. You're going to have to, right? It's the hot stove theory. Is you got to let a kid touch a hot stove so that he knows that it hurts. You've got to let Dave trade into termination conditions so that he knows that it hurts. Not a good bottom, the long doesn't work. Good bottom, the long is rock star. Don't take Mark's advice. Mark doesn't give advice, Dave. But this is the greatest picture ever because it shows what looks like the exact same trade with very different results, doesn't it? And until you get the repetition in to know the difference between the two, to have that faith in that termination condition, guys, you've got to take this one, right? And you've got to say, oh, crap, that was directly into terminations. That was without momentum. and you got lucky, and then they took your luck away, right? I get lucky, I feel cocky, I get humbled, I regroup, and then I go back to the easy ones. Nice trading, Dave. I'm not mad at you for taking this one. Because off those triggers, it had time to get back to the mid-band and retest. And guys, you were so right. The large trigger said don't go short. I was going to go short. Man, I should listen to you guys. You're getting pretty good at following rules and reading charts. Good stuff. Guys, I hope you walk away from this class a little better. It does. It unfolds. I hope that you'll start annotating charts more. I hope you'll start taking more pictures, guys. I hope if you're brand new, fill out this second tab on the spreadsheet. Take a lot of pictures. Commit these looks to memory. And just understand that we're going to piece them together. It's like a puzzle. For you guys that are there, that are looking for the trades, that are working hard, I'm going to share this one too. You guys know the guy who created this. If you're ever in Traders Chat, this is how he taught himself to follow rules. I think this is brilliant. If you miss a good entry, you have to sit out for a minute. If your rules are met and you don't take the trade, you have to sit out for a minute. If your rules are met and you entered late because you second guessed your rules, you have to sit out for 2 minutes. If you jump out for absolutely no reason, it's 3. Moving a stop arbitrarily is 5. Exiting late rather than at the profit area, 7 minutes. Trading against direction is 10. Trading against an area, 15. Trading against direction and area, you're done for the day. And the pros room is what this room used to be called. There was a 101 room and then there was a pros room. And the pros room is where the people that had posted charts, that have asked questions, that had graduated on and had a plan were allowed to present. But what's cool is, well, this is kind of a combination of the two now, Rob. I do double duty. But what's cool is not only does this say, hey, if you break a rule, let's take a timeout, but it reestablishes exactly what it is you're looking for and what you're looking to do and what you're not looking to do. And something like that, write your own. Into the mid-band? Into the divergence highs? Or when the small and the large get above divergence? This is a termination. When it reaches the mid-band, I'm not sure if the large triggers were a full bar away, so I can't tell you. But when it reached the divergence high and the triggers were below, it's a termination. When the small and large get above the divergence high, it's a clear path. But Cindy, remember when I said that with some repetition, you're going to know when it's okay to maybe take a shot into a termination? When you've got a beautiful termination that reverses the market, that gives you this level of momentum, I don't have too many qualms about taking a shot into that one. I'm willing to lose into it, if that makes sense. So it is a termination, but it doesn't look like there was an opportunity. But per the rules, you don't have a clear path until small and large get above this one. So right here, you've got room to the target, odds favorable, clear path. Is that the S&P? No. Is that crude oil or NASDAQ? That's NASDAQ. And it pulled right back to support. Holy smokes. So did you take that trade? Termination, odds favorable, clear path, right to support inside of favorable large triggers. Why not? Okay. Do you see how you could have, ladies and gentlemen? You took the reversal, D-Rock. So you waited for confirmation. Why would you wait for confirmation on this one, D-Rock? What do you need confirmation for? Okay. So divergence printed off of the bands? A white bar printed off of... Did it? We've got a different look then. I had no divergence. A white bar didn't print for me. I'm not waiting for confirmation on this one, especially with the small triggers a full bar away. This is, you can run my ass over. With this look from here and that tiny little one-line window of opportunity, you can have my money. Come take it. If you're capable of pushing down against that, then you need it more than I do. Go supersize. Get the large fries, because that is my best of the best look. That is the most insanely beautiful look that I could ever take. Even with the NASDAQ nuances, that's the best look I could ever take in a million years. And now it's a little ugly. And I don't know why my synthetics aren't printing over, but that's 3 divergences at a fib. Good stuff. Guys, I think that's it for me today. I had a blast. Thank you. I hope you learned something. Newer users, I hope you're realizing I did